Hey, yeah, what's good? It's your boy Royalty Trades. I wanted to come and show you guys a quickly helpful video, and this one's going to be about how to choose strike prices. So, I know when we're trading a lot, I will hear a lot of traders ask, what's a good strike price? How far out the money should I go? Should I go in the money? How long should I go on the expiration date? It's a lot of variables that come into play when you're attempting to find a good strike price for the options that you're trading. And honestly, how far out the money just depends on where is the current price action, what's the sentiment, and which direction is headed. That way you can know, all right, am I going towards you know, a couple of dollars out the money to actually going like leap contracts to where you're going maybe depending on the stock, um, sometimes 20 or $30 out the money. So today, well, tonight, I'm just gonna go over and make a quick little video and help you guys out with a little trick that you can use to help determine strike prices. So right now, what you see is the SPY. And it's been suffering this week. If we go and look at when it started rolling over, we had this gap up right here on the Thursday, and it traded all the way to the upside going into this current week. And then Monday, we just kind of seen it trickle down, and here we are today, post market at 591.89, and look like we could be feeling this and feeling that in the upcoming weeks. I know I've been talking about it. Once one gap start filling, then it might set off a chain reaction and we start seeing more gaps get filled to the downside, which as long as we don't gap down and it's just pure price action, I think this is a healthy gap down. I think this is a healthy dip going into the gaps down. So um, just looking at it, if you're gonna play puts or play calls, it don't matter. What I always like to do is I like to look for areas of consolidation, either to the upside or to the downside. Of course, you're going to see different patterns and stuff, but you want to look and see where does price accumulate the most. And even without these trend lines that I have here, you'll still be able to find a decent strike price. So um, if we look right now we're trading to the downside. So we want to find a nice area of consolidation to help us determine where we want to pick out our strike prices from. So, right off the top, these are two levels that I'm going to look at. You see my trend line right here. So that'd be something that'll just be in confluence with the consolidated zones that I'm picking out. And I'll line this one up too. All right. So right now we're going to the downside. This is the 30-minute chart. So right off top, it's lesser candles, of course, so I can see bigger consolidated moves than versus when I was on the 5-minute chart. I can see more when I scale out on bigger time frames. And this just kind of 30 minutes kind of gives me a general idea between bigger time frames like your hourlies and dailies and smaller time frames like your 5, your 15, maybe your 2 and your 1 minute for a lot of you scalpers. But this is what I'm looking for. I'm playing push to the downside or to the upside. And this is what we've seen majority of the moves at here. And of course, again, it falls in confluence with my trend lines. So going into tomorrow, depending on how we will open up, these will be my contracts of interest, my strike prices of interest. 595, well, 596, 599, 589, 55 or 589, 586, 584, 579, 575, and 569. So these would be strike prices that I would choose. And then looking at the time frame, if you're using TradingView, you use these crosshairs and you just slide it out down here. You slide it out to about 45-degree angle and just kind of line it up. And what I like to do, I like to line the crosshairs up with opening bell for the next day. So we're going into Friday. I want to look at where prices could be around Monday opening bell because I like to, be ahead of the game just to have a general idea of where we should go. So if I got us meeting this 582 crosshair on Monday at opening bell, and if I'm taking puts, I'm going to take puts to the downside at 582 strike price. And honestly, you can go 585 or 584. And what happened is once it breaks below here, then you will go in the money shortly and you will look for a bounce somewhere in here because this box right here lasts all the way to, if you look at the bottom, Thursday at 10:30 a.m. So when I'm predicting how far out to go with my strike prices, A, I'm looking for the sentiment. Right now we're in a downtrend, and then I'm researching my time frames down here to see what's a good projected uh, price action for what day. So I can expect us to touch at least 582 if it rides this blue trend line here all the way until next Thursday. So if you're going to continue to follow the bearish sentiment, you will take puts up here because this is where it ran out of juice last time. So here's your top consolidated, the top of your consolidation. Here's kind of the bottom of your consolidation where it at times broke below, and then finally it's trickled all the way down. And this is a small area of consolidation right here, which we actually could make that just one big block, but that's another area that you will be able to take strike prices for puts at 595 and at 593, and you will just play it to the downside from there. So right now, you will want to take rejections back up here because you will be going back to the upside to retest those exhausted levels. Can it break above that? It can. So what you will do is you'll want to take 599 strike prices calls because you want to give your contract a attainable strike price instead of going out too high. You want to see it pretty much get back in here, probably go sideways, break out, and then retest to give you confirmation before it makes another move up. But going straight off of what I see right now, you'll look for the price action to come back up here if it does, and then you'll play puts on the rejection above this 595, 596 area, and you'll look for the rejection back down towards this Monday support, which, like we talked about earlier, be around 582. And honestly, with this gap right here, you're gonna want to, if it continues to sell off, you're gonna want to see it eventually fill all of this, and that's when you'll look for support. You see how this cups form right here? So you will see if this area right here will hold as a new level of support, tested support, and see if that's what we're gonna do as far as strike prices. So you can do this with any stock. If you're just looking for something below here, And that's what you do. You pretty much go and find price action below, and you find consolidated zones. And this will just give you future strikes. You take the highs, you take the lows, you stretch the chart out, well, stretch the box out, and that'll take you to your next strike prices if we happen to break below this area, which is very much possible. This would just be an area where you definitely want to load up on um, calls to go long, but you'll just see these different gaps get filled. So you see how all this stuff starts lining up once we start scaling into, the 15 and the 5 minute charts, you're gonna see the price action lead itself down into these different boxes right here. And you will just be looking to see the tops and the bottom of these consolidated zones, and those would be your strike prices, pretty much. Um, let's see if we got a line chart. Is ASML? Okay, so here we got ASML, and it's a blank chart right now. So yeah, it's already crazy after earnings, but right now, just with nothing on the chart, probably this trend line right here, I can get rid of that. But just looking at it, you'll want to, if you're charting, look at the daily, and you'll just want to see the bigger picture. All right, where did it fall from? How high can it possibly go? Where's the supply levels? Where's the demand levels? Uptrends, downtrends, general picture. Do you see any type of trend line that you could potentially draw? I really don't like these, but falling wedges. So, that's something real quick, which pretty much means, we'll be coming up, down, back up until it finally breaks out and makes a move up here. But now you're looking for strike prices. So if you want to start going to the upside, what you're going to do, you're going to find consolidated areas. You'll take highs and then you will take lows. Me, I would kind of draw this out here, and then I'll probably make some resistance inside of resistance. Well, boxes inside of boxes to start lining up my strike prices that I'm gonna want to take. So off top, you already see that it's in a supply zone right now, trading up into supply, and then it created a demand level down here. So those little small wicks outside of the strike box, I don't really um try to stretch those out. You just want to look for the most consistent support and resistance that you can find, and then just consider things like these just over dramatic sales or buys as long as you stay within the trend here. So right now you'll be looking at strike prices 661 and 684, and then another one for 700, another one for 727 if that's a contract, and then you'll start hitting up here to this 788, 787 range. And as you can see, if it's trading at that angle, that kind of 45-degree angle, you'll see that boom, it's going to hit this support somewhere around this breakout. and you will either look for the push above it or you'll look for the rejection back down, and you'll use your old consolidated zones for puts. So back down to 727 or 726 or 700. Or if it breaks out, then you can start looking for more details and consolidated zones once you start scaling in a little bit more. So you know we're breaking up here. Now you just want to look for something in here to say, all right, if we break out, what should be the next level that is going to be consolidating at? And then this line up with your breakout. So if it was to break out here, say for instance, you took the 787 strike price to the upside. Well, it gets up here, it breaks out, boom. So you're in the money right here. You'll be looking for the retest, boom. You double down and you'll add to the contract at that 787 and you'll play it to the upside. You'll look for the next breakout. And so even if you load, if you take another contract here at the 787, and let's say you want to take the 863 or the 864 strike. Well, if it breaks out and it runs up to 945, I mean you're in the money, you holding runners, things of that nature. So pretty much that's all you're doing. When you're looking for strike prices, you just go and find the highs and then you find the lows of a consolidated zone. You stretch your strike box out. So that just means you might get a little resistance in here, but once it breaks beyond here, you'll get the retest and the push. Both of these line up pretty much the same, the 943, 944 strike price. So when you're choosing strikes, that's all you do. I just drew this whole chart out without anything there already. And I just showed you guys literally how to um, find the consolidated zones applied to your trading strategies. Find different confluences, whether it is MACD, whether it's your trend lines, whether it's RSI, and you apply it to opportunities like this. If it breaks below this strike box, then you'll load up calls back up to 658 or 650, 658 or 683, and you'll just let it ride in the money. And you just scale out accordingly. If you take three, scale out here, scale out there, scale out here. You know, if it dips, add back um, around here, or if it breaks below, add here, which normally if something happens, you will see like another area consolidation there. And people, this is just how you predict the charts ahead of time. You create your own blueprint. So when you're trading, you know what to follow. It just takes a little bit of your time. This took me what, maybe 10 or 15 minutes to just come up with a predicted chart. No indicators, um, nothing fancy, nothing extra. I'm just looking at a plain chart, drawing the lines, the trends that I see, and finding the consolidated levels on the chart, and those making those my strike prices for where I'm going to place calls it. And you will know if it's a good strike price because once you start doing your study on the Greeks, the delta, the theta. But if you start looking at the open interest and the volume that's on those contracts, of course, the volume might be a little lower if you go too far out because people aren't really buying the options contract that far out. But if you see a lot of option open interest and you see a lot of volume, that lets you know that you're in the right area most of the time, and people are opening contracts and expecting the price action to reach those levels pretty soon. So I'm not gonna hold you long. I'm not gonna do a whole market recap. I will be doing a Zoom call Sunday at 7:30. So if you want to bring your questions, you want to look at your charts, you want to talk a little bit in the chat, Tap in. I'll be posting a link on my Patreon, Discord, and if you're on the After Hours app, I'll be placing the link on there also. So um, here we are again, giving you a little opportunity to, opportunity for me to share my insight and the things that I've learned over the years with you guys. So that way, y'all can add this to your arsenal and be able to, make better high IQ trades. So it look like we probably gonna bleed off some more tomorrow, honestly. SQQ ain't looking so good. Last time I did looked at Bitcoin, it was starting to roll over too. So if you're in those crypto related stocks, be careful. Be careful. Be careful. So if we have a slow rollover, we could see, some consolidated areas here and then drop down here. Somewhere like that. But like I said, we ain't gonna hop too far in there. I guess that was just a little sneak peek to see what's going on with the crypto going into tomorrow. But it's your boy Royalty Trades, just dropping a quick gem and I'm tapping out. I'll see y'all good people in the morning. Don't forget to like and subscribe to my videos if it helps you out, because I'm gonna keep dropping the fire content. See y'all in the morning.